Hello, everybody, and welcome back to our main stage today, starting with our first panel discussion about how AI is impacting and influencing the financial services sector. And this panel discussion will be moderated by Shân, Millie. Shân is a fantastic FinTech, InsurTech expert, also expert on AI and ESG. And Shân, it was a pleasure to be working with you as my co-editor of the AI book and also my co-editor of the InsurTech books. In fact, we have written 2 books together, and I'm very excited to have you moderate this panel session today. And I will let you introduce all speakers who are all with you. And I wish you a great session. I can't wait to hear all your insights.
Thank you so much, Susanne. So hello, everybody, to the xAI family. It's all the messages coming up beforehand were just so great. It does feel like a family party, appropriately social distanced, of course, in today's world. So the purpose of the AI book actually was to bust through silos across financial services, but also between technologists and non-technologists working in the business. So whilst we have 3 amazing experts today, one of the fantastic things, apart from the fact that all of these experts actually contributed to the AI book, and Susan also contributed to the InsurTech book. Go us, Susan. Yeah, exactly. So they're experts, but they're also really expert at not talking in jargon and making themselves understood in ways that other experts, other types of experts in the business can relate to and actually engage with. And we know, don't we, that if we're going to make progress, if we're going to make the right kind of change, everybody has to be on the journey, and therefore there needs to be a level of dialogue and collaboration. It doesn't happen by accident, and it doesn't happen in silos. So the living example of the AI book, everyone, here for you this morning. And I'm really delighted. I know I'm always supposed to say that as the facilitator and the moderator, but I obviously am today. So you've heard quite a bit about Martina, but for those people who are joining us fresh for this session, just a couple of words on Martina, and then I'll introduce Charlette. Charlette, do you want to, hi? Oh yes, they can see your name, sorry. And Susan as well. So Martina. Yeah, Martina is a true data and ESG pioneer. I try not to blush because she knows I'm one of her greatest fans, Martina. Energetic, active change making in this space for well over 20 years. And as Susanne said, is now at Moody's as the SVP for ESG solutions and engagement strategy, as well as the president for sustainable financial markets, which is part of the Next Generation initiative. So Martina's regularly nominated for awards and regularly wins them and gets plaudits from colleagues inside and outside of ESG, a brilliant woman in tech. Speaking of a brilliant woman in tech, did you see what I did there, everyone? Charlette Nkosazana Dlamini, she made history when she won the 2020 Royal Academy of Engineering's Africa Prize for Engineering Innovation, not just as a woman, but as someone under 30. Charlotte, I don't think anybody under 50, in fact, and no woman had won that prize beforehand. So her award-winning innovation, BACE API, is an AI-powered facial recognition system to verify the identities of Africans remotely and in real time. So Charlotte is a trailblazer, not just for women in tech, but as a pioneer in AI designed for African communities, which is important and a huge missing piece in the AI puzzle, I would argue. So welcome, Charlette. Looking forward to speaking with you. Yeah. And then finally, Susan Holliday is an advisor to the International Finance Corporation, the IFC, and the World Bank, where she focuses on insurtech and governance for SMEs and women. Susan's done pretty much every senior role there is to have had and done in reinsurance and insurance for a variety of firms over the years. Working internationally and particularly expert in the emerging markets as well. Now, I've just pulled out this quote, Susan. It's not controversial, don't worry. I think it's actually really rather nice. For Susan, insurance is a basic financial service and has a major role to play in managing risk and improving resilience and sustainability. All 3 things we're talking about this morning. She says diversity and inclusion is essential to close the protection gap. And Susan personally is doing her level best to make that happen. So please join me in welcoming your speakers, and we will plunge straight in to this conversation. The working hypothesis of this session is that, actually Susanne used the words AI is redefining financial services, but let's just say the working hypothesis is that AI will redefine financial services. So I'm going to ask you first, in your view, what needs redefining? Why? And what are you doing in your own life and work to bring about that redefinition? And Charlette, I'd like to come to you first, please.
Okay. Hi, everyone. Thank you for having me here. Hi, Shân. And yeah, so to answer to your question, I think that AI is actually redefining the financial industry because I can see actually some huge impact right now because we can see that banks that are using AI already to study the client's behavior to make better decisions. Even with chatbots, we have seen also how people were able to automate conversation and to engage with clients, right? And in my side, I've been working in the financial ecosystem in Africa for now 3-4 years. And when we are starting, actually, we study the market. We talk to leaders in the industries. When I mean leader, financial company, fintech companies, banks, and we notice that it's true that we are in the age of digital, right? And we have a lot of data hosted by banks they have to manage. And right now, AI is, I think, the best technology to be able to help these companies to manage that. And we notice also that all these financial services that are moving online, they're not taking in consideration the security aspect, right? Because okay, it's good to digitalize your services, it's very good. It means that you're going to get more clients to reach more people, but how to make sure that you secure your services. And for us in Africa is a huge problem in terms of cyber security. And even in terms of financial inclusion too, because some people in Africa don't have access to financial services because maybe they live far from the city. And for banks, it's really hard for them to invest in terms of money, building new physical agencies. So it's very hard. So in terms of what we are doing right now, I have a startup, there is group actually, and we are trying to solve these challenges by providing a product, a digital notification that help financial companies to verify the client's identities remotely. It means that today they can onboard more people in the local aspect. They don't need to actually build a lot of physical agency. They can just integrate with us and be able to verify, make sure that when a client wants to have access to financial services, be much easier. And why is possible? Because they are using AI, right? They are using facial recognition. And you can see that in these two cases, how AI can help and can redefine. It's not just innovation, but can have a huge impact, like a positive impact, because you understand, you know that AI is, is innovative product, right? But it can also have a huge impact in terms of helping people to get more access to some services as they were excluded before. And right now, for what I've seen being part of this industry, and for what we are doing, I can see that I'm really confident about that the future of AI in the financial industry, because I'm sure that things will change, because things have already started changing, but I'm sure that we have a huge positive impact in the future. So yeah.
Wow. Okay. So for you then, redefining it is basically making financial services much more accessible to previously
Exactly.
underinsured or unbanked or whatever it happens to be, communities that didn't have access to it, because of the ability that like your product particularly, to actually validate identity in real time and very quickly, and using things that ordinary people, normal people would have at hand. Yeah. Okay. Thank you so much. It's very clear what you're personally doing, Charlette. You're at the forefront trying to make that happen. So thank you very much. Susan, coming to you then, what needs redefining? Why does it need redefining? And what are you doing about it to make that happen?
Okay, thank you. And good morning, everybody. So I'd like to pick up on a couple of things that you mentioned in the introduction, Shân, and also that Charlette said, which is financial inclusion, which Charlette referred to, but also the protection gap, which for those of us with a background in the insurance industry, we define as the amount of insurance that you would need to kind of continue with your lifestyle after some event happens versus what you actually have. And this is not just an issue for people in developing or low-income countries. It's almost certain that every single person on this call actually has a personal protection gap. I used to think that I didn't, but somebody pointed out that I certainly did, because I have nothing for long-term care, which I probably need. So just to chuck out some big numbers, I was looking this morning at a Geneva Association report, and they reckon that 70% of natural catastrophes in the world are not insured. And that's about $150 billion of gap. And they reckon, frighteningly, just to pick a completely different segment, that 90% of cyber risks are not insured, amounting to about 53 billion. And then think about things like health, long-term care, pensions, which apparently is 100 trillion, but my brain doesn't understand trillions. So there's something to go after here. So in terms of the role that AI can play, I think it's two things. It's about reducing the costs that financial services companies or companies involved in the financial services sector have, so that they can serve more people more cheaply. And it's also about being able to use alternative types of data, because in many of these market segments and countries, as Charlette knows, doing the traditional, trying to use the traditional kind of data, credit scores and all this kind of stuff, it isn't going to work. So my hope is that this leads to a more client-centric and kind of need-based approach by financial services, and not just product pushing. In terms of a few things that I'm involved with addressing this, IFC is the private sector arm of the World Bank, and we invest in financial services companies, both traditional companies and more early stage growth companies in emerging markets. And we also provide advisory services like consulting, including on things like digital financial services. In addition to that, personally, I was actually an early angel investor in a company that Martina is also involved with, Data Moran, which uses AI to assess ESG risks. And I'm an advisor to some startups and funds, and I'm actually on the board of a tech company based in Silicon Valley, Tribal Planet, which is focused on connecting young people to the Sustainable Development Goals, and uses not only AI but gamification and game theory. So that's a whole new different level. So in a nutshell, quite a lot of things.
Yes. So most of your waking hours then, Susan, and some hours where most of us would be asleep, actually you're awake, is spent on trying to be a part of redefining financial services to reduce costs and increase customer centricity, needs first, rather than, as you say, product pushing. Okay, thank you very much. And Martina, okay, what needs redefining, why, and what are you doing about it, please?
Great, thanks a lot. And for all of you who haven't had the chance yet to hear my talk about ESG, that's environmental, social, and corporate governance data and information. That's the field I've been in for a long time, both on the buy and sell side. That's actually the areas where and how we see that there is need to actually align and include triage information to close inherent data gaps. I've just highlighted a bit earlier that when we look at credit ratings and the correlation between the credit ratings issued by, for instance, Moody's and S&P, we see a correlation of 99%, versus in the ESG research and rating sphere, we see a correlation between different providers, which is just about and above 60%. And that is mainly due to the different type of biases we described a bit earlier. For instance, self-disclosure, annualized, more static information, and ultimately backward-looking performance. And we highlighted, in order to build the scenarios for the future that we especially need in the context of climate risk and analytics, but also beyond, we should look at sustainability or ESG analytics and the different type of scenarios when and where the potential costs to capital, as well as insurance liabilities, as Susan outlined, when and how they might make a landfall. And in order to build these scenarios, we really need information in real time. We need information that has forward-looking aspects, and we ultimately need to revamp the type of frameworks for assessments and data methodologies that we are currently seeing in our industry. And this is happening. And this is why there's great potential for AI and FinTech to identify, measure, standardize ESG data and information. We also looked at the current inherent biases linked to the multitude, the pluralism of frameworks. And ultimately, that can work in a way that we are combining information, big unstructured data, harnessed through AI, NLP, and machine learning-led ontologies, and triage them with the existing information coming from self-reported sources, third-party ESG research and ratings plus NGO sources, and then see how we can create more consistency, reliability, and transparency of information.
So would it be fair? I mean, you talked about the data complexity challenge in some really fascinating detail in your keynote, and I heartily recommend everyone to go and take a look at that when they can. But Martina, would it be fair, in my words, so I'm not trying to put words in your mouth, but in my words, to say, actually, what AI can do is to harness, gather, triage, enable proper ground truth being established around various very pertinent risks, whether they're climate, sustainability, but it's all about, to my mind, what I hear when I hear you talking is helping investors and actually corporates get really real about whether their business plans are actually ever going to work based on risks. I mean, would that be one fair way to interpret, from my perspective, in my words, not you as Moody's SVP, but do you think I'm basically on base there?
100%, Sean. And to add, we're talking very often here about disruption. I would rather talk about alignment, and we touched on inclusion. And I'm literally seeing this as building back better and establishing resilience. So a lot of my work beyond the project-related work is actually building capacity, education, and knowledge around some of the key implications and applications, working with our groups across the company to identify the relevant projects.
Yeah, thank you so much. Okay, great. Well, what a lovely agenda and very impressive, all three of you, with what you're actually personally putting into it as well. Really inspirational, actually, if I may say, on a personal note. So the geographical balance of power. I'm interested in how you think AI, from your different perspectives, how AI in financial services, its application, its uses, its opportunities is actually in process, or possibly it's already happened and I just don't know about it, that the geographical balance of power, yeah, Charlette's nodding. She's saying, yeah, it's already happening actually, Shân. The geographical balance of power, our Western-centric kind of view of financial services. We talk about emerging markets. I don't know what else to call them, Susan, but it doesn't feel right to me to be talking about emerging markets. Am I just being a little bit too snowflake-ish, to use that term? But the geographical balance of power, coming to you first. Has it shifted? Is it shifting? And what role is AI playing in that?
Okay, great. So first of all, maybe just a sort of nuance. There is a geographical element, and obviously Charlette is joining us from Ghana today, and we can talk about some examples in what I could guess could be called developing countries. But there are plenty of areas in UK and certainly in US where, first of all, there's room for improvement for everybody, and there are groups which are really, really underserved. So all people in the audience, if you only work in Western Europe or in North America or in Japan or whatever, don't go away, because it's still relevant. So just to give one example, I was horrified when I moved from the UK to be based in the US by the banking system. It was really old-fashioned. It was really terrible. People still use checks. At that time, a few years ago, there was pretty much no banking on your mobile phone. And compare that to what you have in Kenya with M-Pesa, where everyone can quickly pay their Uber driver, and people were doing banking transactions on their phone whilst we were sharing a ride in an Uber. So we should not assume that the kind of more developed countries are necessarily better. But to go back to what I mentioned earlier, in countries where there's a low penetration of financial services, and particularly in my case, insurance, it really is a volume margin game. you have to try and increase the margins to be sustainable, but the only way you can do that is to have big volumes.
Yeah.
And my belief is that AI really needs to play a role in that, because you have to have basically less people touching things, you have to do things faster, you have to be able to deal with lots of large quantities of unstructured data that may not be the same as the stuff that you have in in Western Europe or the US. So that's where I really see the potential to address kind of underserved communities. The other angle, which is interesting, and it involves AI, but not only, but is that there are a lot of companies that we might not think of, and I mean, they're not financial services companies, but they have good touch points with people in a lot of these countries. And I've sat on a few panels actually with people from Grab, which is a rideshare company, but is now doing all sorts of providing all sorts of financial services, including lending, including insurance, in conjunction with Chubb. And why? Because people have their app on their phone, they're used to using it, they can link in all these kind of things. And we know that a lot of companies are starting to go down that road now. Now, there may be some issues about, monopolies and all this kind of stuff, but in terms of reaching people and being able to provide financial services, in my view, that's a positive. So as I say, AI is a part of it, it's not the only part of it. But I think there are some examples where we can learn from emerging markets, and there are also a lot of cases where if something works in a market where you have to keep the premiums, in the case of insurance, very low and serve lots of people, that can be applied in the UK, in the US, in France, in Germany. Why not, right? The industry needs to become more efficient. So I actually think companies, trying to do micro insurance and all the rest of it, they then should be able to adopt that in some of their other mass market operations.
Yeah, some really good points there, particularly around, don't assume there aren't people that are underserved, because we know there are. The protection gap is massive in Western Europe and the UK and the US as well, Susan, as you've said. So thank you very much for that. Martina, in your keynote, you talked about Asia and your own, obviously, Moody's own recent acquisition, but also that's a signal, right? That and everyone, ever since I've been in financial services in one shape or form, which is nearly 30 years, God help me, has talked about Asia as and it kind of goes in a cycle, doesn't it, of the honeypot. But talk to me about that geographical balance and the way that AI is redefining, or not, that geographical balance in financial services. What do you think?
Absolutely, Sean. I mean, I highlighted in the keynote the minority stake in Miotech. That is a provider of alternative data and analytical tools for ESG and KYC in Greater China. And what we have seen increasingly, and this is a market development, I'm sure Susan and Data Brand are seeing the same challenges, because our work heavily depends on disclosure of information. And I talked about the inherent biases that comes with this. There's another bias here, and that is a size bias on the one hand and a jurisdictional bias on the other. So that means size bias, right? Not every company has got the means and resources to actually disclose, collect, first of all, map, and then disclose this type of information. And and others in jurisdictions where there is maybe not yet the policy and regulatory framework for mandatory disclosure. And that's another key trend, right, that we highlighted a bit, I should say, for climate risk, for instance, in the UK. TCFD, that's climate risk governance and reporting, is becoming mandatory. That was one of the most recent announcements alongside the 10 points plan and other developments here. But in these jurisdictions, ESG reporting is not yet mandatory. This is changing, especially in Southeast Asia. I highlighted the role that, for instance, Singapore as a new green finance hub is playing. Even in Hong Kong and other jurisdictions, we see great traction and movement that's mainly linked to products. Not so much per se yet around corporate disclosure of information. But again, this picture is changing. I highlighted the importance of international collaboration and engagement, strategic engagement. We yesterday had the wonderful discussion with Christine Chow on the topic around AI too. And she, of course, has been fundamental in her work around corporate governance with an engagement with companies in Asia to also change perception on what is really material, right? And what do you need to have in place for Western investors to be also interested and attracted to your portfolio? So that is changing, but still the picture remains patchy. And getting access to information in multiple languages, there was also the discussion we had around how you can analyze and interpret data and information, is a challenge. And again, here AI can help to align and triage information. But again, a lot of emphasis needs to be put onto the ontology, onto the NLP, onto the process and the programming of this type of information and data you're looking for before you actually undertake the effort. And this needs to be constantly improved and updated. As we know, I've been myself involved in the past in helping establishing an ontology for TCFD-linked AI reporting for private equity, and spending a lot of time actually in defining terms and redefining them, aligning them, right? Interpretation of and meaning of information is becoming a prerequisite. And given that the field of ESG is so vast and definitions are so loosely defined, this is a challenge, not only a language, but clearly a definitions challenge. And hence, having backing from large-scale corporations and the entire investment value chain, again, this is what I meant at the end about collaboration, is a key prerequisite to understand market needs and obviously address the prevailing gaps that we are seeing in this space.
Yes, for listeners, Dr. Christine Chow is a senior leader at Federated Hermes, and facing into Asian markets in a very meaningful and instrumental way, and getting change. That just goes to show that the importance of those players in the ecosystem as well, Martina. Yes. Well, Charlette, in the AI book, you said, in your contribution to the AI book, you said actually Africa's the best place for AI to make a difference and to be. So I'd love, obviously we all want to hear about your views on the geographical rebalancing of power. Now that may be the wrong terminology to use as well, Charlette, but I think you get my drift. And also, how happy are you to be talked about, for us to be using the vocab of emerging economies or developing economies? Tell us what we should be saying, Charlette, and we'll do it.
Okay, thank you, Shân. So actually, I'm in Africa, and we all know that Africa, we have a lot of challenges, right? And in the book, I even try to talk about some of the challenges we are facing right now. And that's why I'm saying that we have a lot to do in Africa, and AI can help a lot, right? And when you look at the progress, I mean, at some point, we used to be actually very late compared to the global economy because we're not applying technology in general, right? Mm-hmm. When African businesses started to say that, okay, actually we can start using technology to improve the way we work. And we're seeing in the local aspect that this company that are planning early technology was having they're making more progress and they're more successful, right? And today, it's not just about technology right now. Today, we are talking about AI because people are seeing that, okay, maybe in Europe, this company that using AI to make this kind of huge impact in this specific problem. For myself, I feel that in Africa, at some point, some companies actually started thinking about how to innovate with AI, but some have this kind of fear because they don't understand actually the use of the technology, and that's the problem. Because if you understand how you can use the technology, it will be much easier to know when and why you need to apply this technology. And that's one of the challenges we have right now, because even for startups that are working with AI, it's very hard to get clients because some businesses, they pretend that they are ready to use AI, but they don't know. They don't have any idea. They're scared of technology. And we keep pushing because we understand that the only way we can help businesses to compete in the global aspect, it will be at the age, update what we are doing now in terms of technology, apply AI. AI is just is a name, right? Inside AI, we have a lot of technology like machine learning, deep learning, image recognition. So people understand this communication about like and just AI, but you have to understand what is inside and how you can use this specific technology to apply in your businesses, right? And so far, in terms even of when you look at like actually all of these countries that already started applying AI technology, they're making a lot of progress compared to some countries. They don't even they don't know even where to start, right?
Yep.
They see progress already, and I understand also why some countries don't have access. I mean, they can't really apply the right technology in their businesses because even in terms of basic requirement in terms of technology, don't have access to internet. There's a lot of internet issue in the country,
Yes.
so we have to do a lot before you think even going to this kind of advanced technology.
Yeah.
And in terms of skills too, we things are changing since we are bringing AI in the market, right? The market is more competitive in terms of skills because people are not looking at just like I know how to code, right? You need to understand how this kind of technologies works, be able to apply. Even it's not just tech people, also or resource men, everyone in the company has his own role to play in the process of applying AI. So businesses, I mean, financial services have right now to start or thinking about how they can build a framework when everyone in the company will be involved to understand that, okay, that's how the technology works. How we want to have this kind of define a good strategy, how we have to apply AI to maybe make progress. It's not everywhere we have to apply AI, right? It depends. So that's to understand the problem they're trying to solve first and think about, okay, we apply this right technology. And I believe that we will do a lot, right? It's just about step because I've seen a lot of people get into the skills of machine learning, data science learning because they want to bring also to be involved, or also be involved in the African market. So maybe in the next 5 years, we have a lot of local skills, local talent, and it'll be much easier for Africa, actually, a lot of countries to be able to apply innovative technology in their businesses.
Yeah, and just to say, personally, I feel, you're absolutely right. Let's work out what the challenge and what we're trying to solve first. Be customer focused, needs focused first, right? Rather than just obsessing about the technology. So I think you've got it the right way around, Charlette, if I may say that. And I can see Susan and Martina nodding as well. Thank you so much. So I now want to ask you about how AI redefining financial services could work with what you consider to be negative consequences. Okay, so what are you frightened of basically happening to financial services as a result of AI? And what would be a waste of the power of AI that you've talked about? And yes, you're right, that AI means is a whole range of technologies and ways of thinking. It's not just being able to code and machine learning and training sets, but what worries you? Martina, I'm going to come to you first, give Charlette a little break, maybe a little glass of water or something. But come to you first. What are you worried about? What would negative redefinition look like? Or has that already happened as well for you?
Sure. I think one thing that is very challenging is the fact that there needs to be an implication or consideration for humans, when and where human governance, human beings, but also human rights are concerned. And what something is that we are seeing here is that there are increasingly multi-stakeholder engagement initiatives. I highlighted the role that investors are playing in this field that actually aim to identify and assess the risks, but also opportunities arising from human governance and human rights discussions, developments, potentially controversies that are being posed by artificial intelligence. There's debate when and how AI and FinTech, but AI in particular, can enable and or threaten certain human rights, such as personal and political freedoms, when and where it might diminish the work that's been done by humans, especially in the analytical processes. And what we are seeing in ESG research, but generally also in credit rating research and analyses, is that AI screening-based approaches, for instance, to capture a lot of data and information should not be seen as a replacement of human analyst capabilities. We need to capture information. We need to interpret information in a way that it can be aligned and triaged. all of these processes can actually be enabled by AI, but the decision making at the end and the final analysis / interpretation of the overarching conclusions and potential scenarios is something that we would like to see also still staying with humans.
Why is that, Martina? I mean, why do you guys think that? What's the business case for that?
Because AI still in the moment is not fully fine-tuned. I'll give you an example. We talked about sentiment analyses. And if sentiment data analysis is fine-tuned towards a specific case, it's literally like following a case-by-case rule. It needs to have a sufficient repository of potential solutions or options in order to come to the right conclusions when and where necessary. If you are actually training an AI tool just for a specific assumption and one scenario, or maybe a few scenarios, but at the moment in time, the context again, dynamic materiality, right? The context changes. Tools are currently not in scope and don't have the means to interpret this information at scale. That's a reality, and that's why increasing regulation is another area here. It's on the one hand again helpful to set the scene and overcome some of these challenges, especially when we see human rights controversies and others, but it also could potentially become a barrier if and where we need to grow the market further to still introduce all this functionality and make room for it. And this is another area where I personally see potential, not concerns per se, but potential areas where we need to really define again what we need and where the market needs are in order then to align and adopt from a policy and regulatory perspective. Very similarly to what happened in ESG. We let the market develop first, bring alignment around normative frameworks, and now regulation is coming in and providing an additional perspective and an additional, ultimately, area of support when and where outstanding questions, issues around frameworks are concerned.
Yeah, and the role of the regulators in ensuring a level playing field for all players, right, is really important. It's part of that overall dynamic system as well. Yeah, thank you. Charlette, what does bad look like for you? If redefining financial services, AI's role in that, what does look bad for you? What's a negative use of that power and opportunity from your perspective?
And actually, I think that in case that we lost control, it's just like if we build AI models without defining any framework, right? Because we need to think about and everyone is responsible about how we apply AI in the market, right? It's not just like the businesses, not just from the developers to the businesses, users, we are all concerned about this. So we have to make sure that even for us like a developer, we have to make sure that when we define or we are building our product, we put the humans in the center. Who is going to use that? If it's humans. What's the ecosystem? We need to understand the ecosystem where the human actually is, and how we can adapt. As Martina was saying, how we can adapt the technology to the actual market. Because there is also regulation to consider. It's not just building products. No, it's about making sure that what we are building is going to be used to have a good impact, right? Because I've seen some solution used by hackers for the wrong things, right? And even in terms of privacy, there's a lot of things to consider when you want to build a product. And I think we need to build a framework, right? Financial company need to define a framework where the employees, anyone will be concerned about this. It can be like responsible AI, ethical, regulation, everything. You need to think about transparency in the process of applying AI in our market, not just build to build. No, just make sure that whatever you are building is going to be used for the good AI. And I don't feel that, I know technology actually have a good part and a bad part, but it's depend of humans. It has to be built the product. It has to define whatever the machine has to do. Because when you code your product, you are the one saying that, okay, I want my algorithm to do that, to do that. So human, we define what the machine has to do. So we have to make sure that we have control of what we are doing.
Yes.
You can't lose control. You have to make sure you have control of what we are doing. And actually that's that's the big work and the challenges for a lot of businesses, a lot of fintech companies that try to make sure that their employees are really applying some principle and have internal policy and make sure that they are doing the good things. Yeah.
Great, thank you. Susan, what worries you? What keeps you awake?
So when you asked the question, I was thinking about a saying which I learned when I first started training to be an accountant many years ago, which is garbage in, garbage out. And that especially applies to AI, right? So I think that to follow on from what Charlette said, you need to be very mindful of what data you're using, and that you're not basically training the AI quite correctly, but to make biased decisions. And there have been some bad examples. There was one that I saw where they were using it to see who should be on the final list to be interviewed for a job, and it only chose men because only men had done that job before, but it was a job that could equally be done by women. But out of the, I don't know how many hundred people, they chose 5, the AI chose 5 guys. Because it was looking for people that looked like who'd exactly done the job before, and we've seen that also in a lot of cases involving race, and sometimes it's been the same kind of scenario, that it tries to use patterns which may be biased in the first place, or it may just be errors. I mean, as Charlette has addressed, a lot of the systems are not good at, for example, recognizing people of certain ethnicities and so on. So you're just building in mistakes, and then somebody gets on some kind of list and it's difficult for them to get off it again. So my concern is that unless we are very conscious at kind of looking at these topics, there's going to end up with, actually, in a worst case scenario, more exclusion. Because if you don't take a conscious decision to care about these factors, you're going to repeat kind of the same biases from before. And if you want to look at well-produced but somewhat negative documentary on AI, there's a very interesting film which I looked at a few days ago called Who Owns the Code? Now, I don't agree with all the things in this film, but it is very interesting and kind of making some points we all need to be aware of. And then the other thing I'd just like to mention, to pick up on Martina's point, is I think we need regulatory balance. I do think that there's a threat that we are not able to do these things that will make financial services more available and more affordable because of kind of too much regulation. And I am a bit worried. I mean, I saw live, because I was in the States, people in the Senate questioning like Mark Zuckerberg and that kind of thing. And it was clear that these people have absolutely no idea what they're talking about. I'm not an expert on social media, but it's all relative. And so there is a risk. I'm not saying that all politicians don't have a clue about technology or whatever. There is a risk that that there are rules and regulations that are either out of date or that are well-meaning but kind of completely useless. And it was quite shocking. And these technology areas are moving very quickly. And of course, it's not easy, if you're 70-something years old senator from wherever. But I genuinely really do think that that's also a risk. So that there are some things that could go horribly wrong. But if we're not prepared to use these technologies and develop them, then we won't get any of the benefits. So it is absolutely a balance.
Okay, so I'm just thank you very much. I'm just looking at the Q&As here. So Carol Rodriguez asked a question that has been answered subsequently in the conversation. So Carol, thank you very much for your question. I'm glad that our panelists were able to answer it for you. Errol Finkenstein, CEO Corporate Solutions AI Limited. I love this. Apologies that India and Asia are 5 years ahead of Europe, UK and North America. So I think that's an observation rather than a question, but I don't know what our panel wants to do with that. Errol's also said a PwC Germany report recently said, his words, not theirs, that India and Asia in general are around 5 years behind the German, Swiss, Austria in banking and financial services in conversational AI. I think what Errol's saying is he actually thinks this is true of UK, Europe, and the US. Do you agree? And if so, why? So I think the question is, UK, Europe, and US are behind in conversational AI. Do you agree? And if so, why? Is that something you want to talk about now? Or yes, Martina?
Sure. I think it up and foremost depends on the sector. We are talking about AI, fintech, as if it's a sector in itself. I think it's ultimately relevant and applicable to many different sectors, and therefore has different time horizons and implications. For our sphere, it's very interesting. ESG, research, ratings, frameworks, and policy. Ultimately, the EU, as we said, was leading the way. What I can see is the speed that the discussion has been picked up, and specifically in Asia now, and the developments that are coming, especially when and where AI, fintech, and ESG is concerned. I talked yesterday at the session, we mentioned Sean a bit earlier with Christine, I talked about developments at the stock exchanges in Asia. I talked about how, fintech and blockchain technology is becoming increasingly integrated. That is happening at an unprecedented speed, and something that we're not seeing as fast over here. And that again has to do also with the regulatory frameworks and safeguards that we discussed earlier, which are important in order to ensure there's a level playing field, but could potentially be seen also in regards as barriers when and where market participants and entry to opportunities are concerned. So again, I would fully agree. Asia is picking up speed in our sector sphere, and potentially in other areas more broadly for banking and challenger banks and others. There's a totally different speed / development happening and coming out of Asia, back also potentially driving developments here in our markets. But it is really very much sector dependent.
Susan, do you think it's more important to go fast or to go thoughtfully in this arena?
Well, at the risk of being extremely annoying and never being invited to be on another panel, I think you need to do both. So you have to be careful with the famous move fast and break things, because you could break some pretty bad things, as we discussed in the answer to the last question, with lots of knock-on consequences. If people don't trust staff and think they're going to be wrongly arrested by the police due to facial recognition, I mean, this is not fun. But to be honest, I think it's necessary for the kind of good companies, if I can put it like that, and organizations to move fast, because otherwise, for sure, some badly intended groups will be doing that. And we've seen problems, particularly in the 2016 election in the US, a bit less so this time, with people using, in fact, AI to try to manipulate people's views and brainwash them and give propaganda and all the rest of it. One comment that I just make on the previous question, US definitely has good capabilities. That said, I don't think conversational AI is that hot in terms of how it's actually being used anywhere, right? That still needs a lot more work. But the other thing that I would point out, and this is kind of, there's a tension here, because we're talking about countries in Africa being very innovative and lots of skilled young people and all the rest of it, but there's more incentive to develop some of these things in countries where, to put it bluntly, it's expensive to employ people, and you don't have a lot of people. So by using AI instead of a live call center, probably in US or in Western Europe, you can save a lot of money. That's not so much the case in some other countries where there are lots of people who can work in a call center and they're not necessarily paid that much. So I think it really depends. But because I'm overall bullish on the potential of this, I hope that it moves fast, but fast in a conscious way, right? Not fast out.
Yeah, FOMO shouldn't rule, in other words. Charlotte, any comments on that?
Not really. I do agree with Susanne and Martina. Yeah, so I think that, and I think we need to think about the fact of maybe what I can add. I mean, for what I already said is about like the security aspect, right? Because we mentioned that, and hackers, they still use this technology for the bad use case, right? But you can't avoid that. We still have people who want to use this technology to do all the one thing, right? But what we can do, as a organization, maybe good organization, we can really invest in AI. We can invest in research to make sure that we are able to also provide some tools, some products that can really reduce this bad use of AI, right? And it's going to be more about like a fight. Like you're in the market, you just need to fight and be able to make sure that whatever you go to build, and you need to understand that you always have a bad use case, and you have a good use case. So it's depend of us, like it's depend of the country to make sure that they have this kind of regulation, and that also they're also helping with kind of businesses that are trying to solve these kind of challenges by supporting them that are investing in the businesses and a lot of stuff. So there's a lot of to do right now. So
yeah, absolutely. And I know you're keen to get on with doing it, Charlette, as well. So Path and Errol, Errol saying great responses from the panel. Excuse me. And we've had another question from Path, but I'm afraid I've already let us go slightly over time. So James and Susanne are going to give me a black mark, I'm sure, on my moderator's reporting notes. Hi, Susanne. So I just wanted, if it's possible, just to give our panelists one final say your final statement to the people joining us today about AI and the redefinition of financial services. So just very briefly, one thing you would say if we were in a room with our audience members and you would be saying, Martina, what would be your closing remark today?
My closing remark is very similar to what I said following my speech. Actually, there's enormous potential for AI, blockchain, fintech generally, to actually get better insights and to align and standardize, include somehow extra financial and non-financial information. And in the future world that we are seeing, where XBRL tagging, for instance, is becoming a reality, which will also help us to overcome some of the accounting challenges in aligning financial and extra financial information, something we hadn't had the chance to touch on today. There is definitely an increasing focus to ensure that we are getting better insights, not just more, but better insights, and to ensure that this meaningful information can be actually included into the decision-making process through these type of solutions as strategic enablers. And that's an absolute prerequisite.
Thank you very much. Charlette, your final sign-off to the audience for today, please.
Yeah. So I just want to say that we need to forget this idea, human versus machine. It's not about a competition, right? Because AI is not about going to replace compliance of not. It's just like a support they are bringing. And I invite actually businesses in terms of financial company to invest in this technology. Maybe AI seems complex, but it's not complex. You just like get the right insight to learn what it's about and how you can apply, you can choose the right AI model in your specific problem. And I mean that after it's been much easier for any type of businesses and to be able to feel like, okay, actually I apply AI and I can compete even in the global aspect. Because tomorrow is about innovating solution. It's not about like just sitting and be comfortable and keep using traditional system. It's not going to work. Tomorrow AI is the future. And actually, yeah, it's the future. So start early right now.
Okay, thank you. And Susan?
So I also think huge potential, but don't let it become a black box. You need at every stage to be very conscious, question what's going in, what's coming out, how, why, kind of be cynical, play devil's advocate to the algorithms, because that's the only way that you will avoid hidden mistakes and, as I say, building in conscious or unconscious.
Brilliant. Thank you so much. Thank you so much, panelists. It's been a real pleasure for me. And Susanne, slightly late, sorry, but I think it was worth it. Is that okay?
It was fun. Thank you so much for moderating this panel so well. And thank you to Charlette, to Susan, to Martina, for joining us today to talk about how AI redefines the financial services industry, and hopefully eye-opening, for all our audience, our guests today. Now we're moving on straight to our second panel discussion. And after our second panel, we will open up for networking, having a 50-minute networking break, and also to invite you all to watch our 10-minute showcase of the future FinTech film. And after our third panel, we will show you the whole film, the whole 1-hour film on the future of FinTech. But thank you very much for our panel here, and I will switch over now to our second panel discussion. So just see you all in a second.
Okay.